Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And as I do each and every week, I've left my lines on the chart from last week's report so you can see just how accurate candle charts are as a forecasting tool. And if I zoom in here, you'll see that on Thursday, right here, that's on the 5th of April, we moved up exactly as I said we would to fill that gap. Now, if you've been following along with the Market Guys strategies, you'll know that gap fills 80% of the time, and then after the gap fills, we get an 80% chance that the stock will reverse and go lower. And this is one of those textbook examples of how that happened. Again, this horizontal line that I drew last week, I said that was the gap fill point and that would be our target. So you can see obviously what happened today. Now this was a pretty big down day. At one point today, being this is recorded on April 6th, we were down about 600 points at one point during the day, and then we rallied off of the lows. So you see that shadow right there. The interesting thing for the Dow, and I'm going to erase this line so I could draw my lines for next week's forecast, you'll see that the volume at the bottom of the chart right here was increasing on this red candle. What does that mean? Well, it tells us that the sellers are motivated today. Obviously, there's a lot of geopolitical news out there with the White House threatening all kinds of tariffs on China, and China talking about retaliating. The bottom line is, if you've taken any kind of negotiation course, you have to develop or at least establish some sort of leverage before entering any negotiation. So before you go crazy and panic on what's happening in the news, understand, and this is my belief, that President Trump is creating leverage so that when he steps into the negotiation room, he will be able to negotiate better trade deals for the U.S. And that's really how I see it. Now, the market is reacting to this news, as we've seen throughout the week. I really haven't seen this kind of volatility in my 30-somewhat year career here. This is crazy volatility. But the good news is that when the fundamentals are thrown out the window because of the volatility, we can most definitely rely on the technical signals, and this is exactly what we're seeing here. So what's my forecast for next week? I'm going to erase this final line and leave these horizontal lines because we are in a trading channel. If I back out just a little bit, you'll see this is a support level that was taken from back in November of last year. That support level is holding while this gap fill point is resistance. So if I zoom back in, let me show you what I think we could see. Next week, I believe that we will go lower, and then I believe we're going to see an attempt to bounce off of this support level down here. So this doesn't mean just get right back into the market immediately because it's a day we can go shopping. I think we need to really wave the caution flag and remain very protective of any long positions, because if you look from the beginning of the year, right from January, we're seeing successively lower highs. The lows are holding stable, but the highs are getting lower, and that tells us that the sellers are continuing to stay in charge, and that's why we have to remain protective. Now, if we look at the Qs, jumping to the tech sector here with the power shares, we have the same thing that's happened. We rallied early in the week. We saw this big red candle today. There's still a gap above the market up here. So while I think the NASDAQ could drop just a little bit before testing that support, I think ultimately we'll work back up to see a gap fill point before we go any lower. Now, what I just drew here is more or less a 2-week forecast. So this isn't just for next week. It's going to be for next week and the week after. So this could take a couple of weeks before we see a significant bounce off of that support. And I'm going to remove these lines right here, which are the previous forecasts. And then we can move on to the next market, which is going to be a more broad-based index, and that's a Russell 2000. As I mentioned last week, I drew this line horizontal to what was the 20-period moving average, and I said that the 20-period moving average is most likely going to act as resistance. If you got that report, I would suggest you go back, review it, so you could hear exactly what I meant when I said that the role reversal, once the 20-period moving average is broken to the downside, it then becomes resistance, hence the role reversal. So I think this is going to maintain as resistance up here. I'm going to erase these lines right here, and I'm going to draw the new lines for next week. Look at the support level down here. I think we're going to go down to test that support, and then we'll see whether or not that support holds on a bounce. So that's for the Russell 2000. Now the S&P 500, same scenario right across the board. I think we're going to go a little bit lower here before bouncing with the rest of the markets. And the reason I think that the S&P is going to eventually come back up is because we have a gap fill target up here with that now acting as resistance. So the S&P 500 is going to be caught in this trading channel right here, and I still think that the volatility is going to continue to increase as the emotions are drawn back into the market by those investors who are really uncertain about what's going on. Now, if you want to learn more about what we're doing at The Market Guys, just go to themarketguys.com, click on the video tab right there, and I'd like to call your attention to the one that's about 3 rows down on the right. That's Trading the Gap. That's a 6 to 7 minute video that you'll get a lot of information from. It'll show you the gap trading strategies that we use and the 80% rule that applies to that particular strategy. So that's it for this week. Thanks for sticking with The Market Guys, and we'll talk to you soon. So long.
This video segment is a small part of what The Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.